Hi, everybody. This is Kirk Spano and Scott Shooter Henderson. Put out a article for the charts of the plug and play dividend stocks. The growth stocks are coming in a couple of days. But what we want to do is just run through 3 charts of companies that we talk about publicly. We're not going to show the rest of the list to the public, but we want you to take a look at these 3 charts and understand how Shooter is doing things. And then I'll incorporate what I've been doing so that you can see that what we really have is a long-term forecast. And then when we get close to that forecast, Shooter drills down to get the most optimal entries for you in real time. So let's take a look at Apple, which is on our dividend list. And this is Shooter's Elliott Wave chart. And I just want him to explain what this means to you. So Shooter, why don't you tell us about something that's important on here?
Well, the most important thing is that it held at that 150.10. That was actually a great look. Actually, we got a breakout candidate here. Our next minute wave long is at 160.137. Now, that's a shorter time frame countdown at the 90-minute. You know, ultimately, what I do is I take a collective of different time frame analysis, and I ultimately deliver this chart. Now, the golden box to the right is a targeting mechanism I've created to give us a visual, and it attaches Fibonacci levels to the wave degrees and those counts. Now, those green labels where you see the number 3 up towards the top, towards the April 24 high there, where we're projecting an intermediate wave there around 187. You know, at this point, as long as we stay above the 50-day on this look, you know, it's got some decent upside, and I think we do ultimately break out.
And your last minor wave long was down here at 150.10.
Yep. That was, that was an entry that we put out, and I know some folks probably caught that. When we had our breakdown from the prior wave, which is over to the left of the breakout line.
Right. So for folks who are trading a little bit more often, that's what some of these are. So, and then you have
short-term entries.
And then you have entry 2 and entry 3.
Yeah. Now that is okay. In Elliott Wave, we have account structure that when we have account structure, we know about where we're going to go. Then when it invalidates or it fails, we also have a very good idea of where it might go. Now, on that particular chart, an entry 2 label indicates it's one standard deviation from the mean, is what it is. Based on a weekly chart, the entry 3 is 2 standard deviations from the mean. The reality is less than 8% of the time across the board on any symbol, we do not see 3 standard deviations that occur in any Elliott Wave count, more than 8% of the entire tape. So it's pretty accurate to the downside. So what I'm basically saying here is the world's going to end. I don't think we go below 123 here on Apple.
Okay. So that's your worst case scenario.
Yeah.
All right. So here, folks, I want to show you something. This is the chart that I put up 4 or 5 months ago. And in fact, it was way back in 2020. So this is a pretty old chart that hasn't been updated much. And see where I had the price for Apple. I thought they could get down to around 100. And now you see that, the other price range, the where to get in at the start was around 130. There he is, right about 130. That's his second standard deviation. I don't usually do these shorter term moves. I'm looking for a bigger discount because down here is usually where you're below fair value. This might be fair value here at 150.
It's funny you say that.
Right.
It's not on the chart, but notice the blue resistance line. I call them my speed lines. Up at the top of the chart goes across the whole chart. And then the red speed line down to the bottom. What it basically gives us is like a megaphone pattern.
Right.
So when that 3 prints at 187, I don't have the breakdown fibs on there. That's the second golden box down at 130. So when we hit up there, that's a very likely target is that speed line, which is the red line towards the bottom of the tape.
Right. And the reason why I come up with these boxes is because I'm looking at what is mostly institutional interest. The institutions still control 80% or more of the trading on the market. Before the millennials got their stimulus checks, it was 90%. Now it's down to about 80%. So over here, these are volume studies, basically some quantitative work. And it shows that right in here, you run out of sellers. So there'd be massive support in here if it really did break down. And I make an adjustment because on this chart, it's Apple, right? It's not some just random S&P 500 stock. This is Apple. I mean, it's the market. So this is the one that people are going to go to first if the market breaks down, if the Fed starts driving things down. So this is where I had it. The top of mine coincides with shooters. So I think that probably I need to move this up a bit. But in an end of the world scenario, I mean, Apple really could go down to this 80 to 100 range, but it would really have to be end of the world. It would have to be the economy stopping again, sort of thing. So over here, he has Ford, and you'll be amazed at how close we were on this. So Shooter, what are you seeing here with your primary wave at 1233 and then your various deviations down here?
Now, unsimilar to, Apple, Ford actually looks like it's developing a launching pad to me, where it's, once we hit that 2, back at that primary wave setup, that's a future look. That could happen anywhere between now and January 2023. However, it looks like it's going to happen pretty quick. I would say maybe by August, I think we get down there. So now we're putting in a 3 now, which is that 1447. So we're going to put in a wave 4 bounce a little bit, probably towards the 50-day. Okay. And then we'll head towards that 5 down at that 1233 is what it looks like to me. But that type of look to me is really a launching pad. You can also look at the RSI structure down at the bottom of the chart.
Right.
You have a flattening pattern in RSI. In other words, you get to that 80, multiple times on that leg up. So it's basically that whole leg 1 up on that primary wave, where the green label 1 is. Is just a building pattern. So the next leg up should be broader and bigger.
And here's where we were on my charts that I've been on Ford since February.
Yep, since $5.
Yeah, since February.
Good call, by the way.
Yeah, we bought this one right at the bottom, and it had an increasing price range where it was pretty easy to just buy this all the way up. And then it's got some more volatility as the spikes got bigger. So I moved my chart back at the end of 2021, and I said, look, we really could get back down to 1213-ish. And why is that? So if you go over here, you see it'd be pretty easy to exhaust the people who used to be buyers, who as the stock goes down, they panic and they dribble it out. But then right in here, you have just massive, massive support over this time frame. These are long-term holders. Look how long they've been doing it. I mean, this is a long period of time, going back to 2016, which nobody believed me when I told them that was really the base in the market. This is just massive support here. This is where you would see phenomenal institutional money and hedge fund money come into the stock around $10. Now, the reality is that these types of interests tend to move up a degree. So really, you should think of this as being right here now, which coincides with my bottom fishing. So Shooter is basically telling us 12, 11, 12, 13 bucks, and he'll whittle this down in real time, day to day, as we get closer to a pivot. But I knew that this was the range we were going to get down into. So we've broken all the way through the top. And if the market hadn't been weak, I think it would have bounced back up. But the market's weak. Everybody expects the Fed to tighten. Now sentiment is starting to turn. So as sentiment turns, you get more downward momentum, more people selling the rips, which has been the brand new narrative that I told you 6 months ago was coming. So we're here on Intel, which fundamentally I love long-term, but it clearly can fall a bit. And that's what we have to watch out for. So semiconductors are off, about 23, 24% off their peak, and Intel gets part of that. Plus, there's people out there saying, well, they have all this CapEx and they're not going to have profits for a while. My argument is it doesn't matter because the market's forward looking and the government's going to give them $50 billion to build more plants. And ultimately, they're going to get all kinds of business that Taiwan Semiconductor was getting, blah, 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 all the fundamental stuff. So Shooter is saying a primary wave setup is right around 42.81.
Yep.
Why don't you tell us about that?
Yeah, it looks to me like it's just going to retest the base, back where we put in the A back in April or May of 2020. Mm-hmm. Back a little bit further, that one right down, that floor right there. Mm-hmm. So, I mean, we got a lot of support right there. Yeah. Now, all I'm going to say is if it breaks below that, look out, where those lows are, because then we're probably looking for a 123.6 fib test, which is the red line back down around the C level right there. And then we will probably bounce at a similar degree to the current downtrend, because they tend to stay in those down channels when that occurs. But I would think that we get some buyers down there around 43, just with the history in Intel. And on top of that, it looks like there are going to be supply shortages in some parts of Asia for the manufacturers. But at the same time, I think Intel has its minerals on the supply side tied up. I don't think they're going to have shortages. Where some of your multinationals have deeper pockets and they bought in bigger chunks, and they have signed long-term contracts with the miners for the different minerals that they need. So I think Intel has a moat there that I think a few people overlook. But ultimately, it looks like it'll bounce off of that primary wave setup.
Right. Okay. So we'll keep this technical. Everybody knows why I love Intel. So here's my chart that, going all the way back to early 2021 when it was way up here. And usually when we get a spike is when I update my chart and say, okay, so this is about where it's going to come back to. So I have, in what it looks like about February of 2021, I put this box together, said it'd get down to about 42, 43, which is exactly where shooters right now. Things can go below what I consider bottom fishing on market sentiment. There's all sorts of things that can go wrong. But when you take a look at this, you see all this institutional ownership right in this area. Now, in an end of the world situation, your sellers will exhaust right about here, which is 3750-ish, 36-ish, 3650, 3750. That's about where seller exhaustion is. It's when all these people who bought are done selling. What does that coincide with? His second standard deviation at 3790. So what I want people to keep in mind is my longer term charts are really to help you look forward 6 months to a year to know where the short term cycle could be and whether or not you want to participate in trading the uptrends, or if you just want to be a bottom fisher and wait until you have a big margin of safety. I can't tell you what to do. A lot of you are more aggressive. A lot of you are more conservative. You're going to have to figure out, okay, in this situation, did I want to keep buying it? Well, the answer was no, because, that was Apple. In the case of Apple, the answer was yes. But in the case of Ford, see how it came down? When it was up here, I told you it was going to get back down here. So you have to decide, did you want to try to FOMO it? Did you want to chase it all the way to the top? I know Shooter told people to take some off up here, and so did I. And now we're just trying to figure out where the best entry is. And it seems, I'm saying 13-ish. He's saying 13 down to 10-ish. There's a range.
That corresponds with the floor of that count.
Right.
Those next entries.
Okay.
The second entry, third, and fourth. I have those there because there are three different levels of support down there. So, if it gives it up, it could get down there. If it breaks below that speed line, the red line.
Right.
But I don't think it does. I think it chops around here and just fades. I don't think it gives us an exhaustion candle like some counts do.
Right. And I think that this is a good spot to mention why I sell cash secured puts. So if I already have a starter position and the stock gets down to 13-ish, I can sell a put, maybe get $1, which would mean that my net price for entry would be way down at 12. And if it bounces off of one of these levels, I just have made myself $1. And so I can keep selling puts all the way up and always have that premium as kind of my margin of safety. And I've told the Exact Sciences story. I sold puts all the way up on Exact Sciences twice. And every now and then you get volatility in the market. Oh, look, I own more Exact Sciences, but I had collected premium 2 or 3 times between every time I had some more assigned to me. And I think that for most people, selling the cash secured puts as a way of getting that $1 or $2 of safety, margin of safety, is a good way to accumulate. Or you just put your limit orders in at a price where you're like, you know what, even if it goes down 5 or 10 or 20% from where I bought it, I'm okay with it in the short term. And that would be my last point, is in general, you want to space out your buys at least by 10%. There's people who buy something at 41 and then 40 and then 39 and 38. That's martingale. That's gambling. What you want is, okay, I bought it at 40. I'm 32-ish maybe is the next time that I buy something. You got to spread out your buys pretty far especially the longer term investor you are. And then if you're a shorter term investor, you use Shooter's daily charts over at Fundamental Trends to do the swing trading. So these are the weekly charts. These should help everybody who's a position trader, who thinks about their investments in terms of quarters and years of holdings, help you get those really good entries. So keep an eye on that and understand that we have different approaches. And the reason I didn't get somebody who does things that I do is, do I want confirmation bias? No. I look at Shooter's charts all the time and I'm like, oh, I better move mine because it looks like he's more right in this instance because of where the market got to from 6 months ago to now. And now he's in real time saying, okay, well, yeah, we got down into that area that you said, and this is about where it's going to finish up. This is where it's going to pivot, or this is the second one where it might pivot. So he's finding those 2 or 3 pivot spots for us so that we can actually scale in at spots that make sense to scale in. It's not random. It's not gutting it out. There's a formula. There's a process. And anytime you have a formula and a process, you can build in, again, a margin of safety. It's kind of like, it's like bowling with the bumpers in the gutter, right? You can't throw a gutter ball if you have those bumpers there.
Right, guardrails.
Yeah, you might not get the best looking strike, but you're not going to throw a 0. All right. Anything else that you want to throw in there, Shooter, before we let the folks go?
Nope. I mean, not at the moment. I mean, I don't have anything particular outside of, I think TLT is going to be a good trade short here soon. If, anybody wants to come in the room and find out when we enter. Okay. I think we might have about $20 to the downside.
Yeah, I agree. I think that TLT, depending on how aggressive the Fed gets, could be pretty interesting. The Brazilians are saying the same thing, the Brazilian hedge fund managers. And that's because they're hypersensitive to inflation, but they might be right. Shooter is going to do some introductory videos here. We're going to call it mini camp, and that'll be available to everybody on his $1.99 channel over on YouTube. So if you really want to learn more about Elliott Wave and how he's applying it, for $1.99, you can only keep it for a month. For $1.99, you'll be able to watch his mini camp videos. And then for those of you who really want to get into swing trading, he's going to go from mini camp to boot camp. And boot camp probably released, I'd say, very late this year, if not maybe early next year. But we'll see how fast people want to do it. And then someday, probably next year, certainly after he's taken a vacation, he will eventually do a master class for those of you who really, really want to drill down and become full-time traders. I know that our group doesn't have a lot of those people, but we are adding them pretty regularly over at Fundamental Trends. So incrementally over the next year and a half, mini camp, then boot camp, and then masterclass. And I tell you what, I'm going to be afraid of the people who finish the masterclass and probably hire a few. All right. Have a good day, everybody. Take it easy, Shooter. Thanks a lot.
All right. Have a great day, guys.